Hello everyone, I hope you all are doing very well and welcome back to the channel. I am Professor Rahul Jain, your guide to understanding the world of finance, investments and the technology. Today we are going to dive into one of the most important foundations of the financial world, the stock market basic terminology. Throughout this playlist we are going to learn important terminologies that is going to be work as a stopping stone for the learning basic understanding of the stock market. Whether you are a beginner or trying to make sense of terms like stock, share, equity, or the securities, or an aspirating investor looking to build a strong financial knowledge, this session is going to make everything crystal clear, right? In this video and in our playlist, as we are going to discuss our content video by video in the playlist which is going to be named as a stock market basic terminologies, right? So basically in this particular session, in this all entire compiling session, we are going to explore the most common stock market terminologies so that the basic should be clear first. Every investor must need to know what is stock, right? What is a penny stock, growth stock, value stocks, and defensive, cyclic, dividend related stocks, and all other terminologies also, which is going to be related with the stock market. So we are going to just have a very beautiful and knowledgeful sessions with the examples and real world insights. So by the end of this particular playlist, basically it is just the video number one, and the playlist link will be put into the description section, so you can just go through that. And please subscribe this channel so that in future also you are going to get updated with this particular stock market related terminologies and more related to AI, ML, and multiple related to the emerging technologies lectures and insights also, right? So grab your notebook, and you are not only going to understand what these terminologies means, but I am also going to explain them how they shape the investment decisions and the market behavior. So without any delay, let's start. So basically the first and most important thing that we can just see here is what is stock. The first term itself is a what is stock, right? So a stock is a financial security, basically that gives the stockholder, let's say if you are a stockholder, then it is going to give you the claim of part of company's assets and the earnings. So stock is a financial security which is going to give you an authority over the company's assets and their earnings. So you can just understand it like if a company, let's say, have a 1000 number of shares, and out of that 1000 number of shares, if you have 10 shares, it means that you own the 1% of that company. You are just owning the 1% stock of that company, right? So stock is just a kind of, you can say that, financial security which you can trade between the investors also. And because of this particular stock, you can claim the company's assets and their earnings, right? Now let's talk about the types of stocks. So might be many of you have heard about this, but we are going to discuss each and every type of stocks with their basic definition so that you can understand, and with you can take the one real world applications examples also. All complete session is only going to be for this educational purpose only, so that you can just understand the concepts, right? This is only for the educational purpose. So basically, on a broader way, we can just divide the types of stocks into common stocks, preferred stocks, blue chip stocks, penny stocks, growth stocks, value stocks, defensive stocks, cyclic stocks, and dividend related stocks. So the first one is common stock. So what do you mean by common stocks? Common stock represent basic ownership in a company. For example, uh, in which, let's say, if any particular shareholder is there, so holders can vote in the shareholder meeting. You know that multiple meetings are there, annual general meetings and multiple meetings. So the shareholder is going to be, you can say that they can vote into the shareholders meeting, and they can receive the dividends and the bonuses and the different kinds of perks which company released, right? But it's not guaranteed, in the sense that means if the company declare the dividend for all the shareholders, then they can just get the guaranteedly. There is a common difference between the dividend guaranteed and not guaranteed dividend, which you are going to just learn in the later on slides of this particular lecture. So the common stock is just like, for example, owning 100 shares of Infosys. Let's say the share market is open and you are having a demat account of any particular AMC, and you are just purchasing the 100 shares of Infosys, let's say. It means that you are a common stockholder of that. So whenever the Infosys is going to hold the meetings, you are eligible to vote. And in annual general meeting, if they are going to declare the dividend for all, then definitely you are going to receive that dividend, right? So that is what we can call as a common stock. But the second one is preferred stock. So here the preferred stock get fixed dividends. This is where the common stockholders and preferred stockholders are having the basic difference between the dividends. So preferred stockholders get the fixed dividends and the priority over the common shareholders during the profit distribution or the liquidation, but usually no voting rights. So for example, what do this mean? For example, you can understand it like, let's say if you are having a Reliance Industries share, and if you are a preferred stockholder of that, then you will get the 6%. Let's assume that you are going to get a fixed 6% dividend each year, even if a common shareholder is not going to get that, but you are going to get that because you are a preferential shareholder of that. Getting it? So that is where we are having the basic difference between the common stockholder and preferred stockholder. One more thing is here. Let's say if the company is going to go into the liquidation phase. So once the liquidation phase is, what is the liquidation phase? Means company want to just dilute its all of, you can say that sell out its assets and everything. So after clearing the debts, there is a guarantee that the uh, means preferred shareholders are going to get their amount first, their invested amount first. Thereafter, at the end, at the last, common shareholders are going to get the amount, right? So that is where we can just get the difference between the common stocks and the preferred stocks. Thereafter, the third one is blue chip stocks. So chip stocks, everybody well aware about it. These are the shares of large companies which are financially strong and reputable companies with a history of a stable earning and regular dividends. So normally these are the companies which are just like top 50 or top 100 companies of any stock market. You can take any country's stock market. So top 100 or top 50 or top 30 or top 200 or top 500, whatever. But basically the top largest companies, you can fix any particular amount of ratio. So the largest company where the financial growth is stable and the earning is stable, revenues are stable and they are growing and they are paying the regular dividends, such kind of stocks are called as blue chip stocks. For example, let's say in talk about the India's stock market case, we can call like TCS, Tata Consultancy Services, Reliance, HDFC Bank, Infosys. These are common names which we can put under the blue chip stocks, right? Next, penny stocks. So penny stocks are what kind of stocks? Penny stocks are the stocks whose price are very less, very low priced shares, which are usually under 10 rupees in India. In the current now, in the current days, if I talk about the current days means if we talk about the November month of 2025, then the Vodafone, let's say if we talk about means under 10 rupees. So such kind of share, which are usually under 10 rupees of the small or unknown companies are also there, which maybe the many of the shareholders, so many of the people are not heard of the name of the company. So these are going to be considered as a penny stock, which are very highly risky and highly volatile also, right? So the example is just like the company, for example, XYZ, which is trading at 2 rupees per share. So such kind of companies whose market capitalization is also very low, and the you can say that the price of per share is also very low, under 10 rupees, like some micro cap shares under the Bombay Stock Exchange. It could be any company name, but this is where we can define the penny stocks look like, right? Then the growth stocks. So how can we define the growth stocks? Growth stocks are basically the stocks of a companies which is expected to grow faster than the average in sales and profits, often reinvesting earnings instead of paying the dividends. So the growth stocks are the stocks where the growth is faster than the average sales or their peer companies, and the profits are, they are also going to make more profit than their peer companies. Rather than paying the dividend, they focus onto the growth. So, for example, if we talk about companies like MRF or Tesla, their completely focus is on expansion rather than paying the dividends and like that, right? So, such kind of stocks we can put under the growth stocks. And thereafter the value stock. So stocks that are appear to be undervalued compared to their real worth, means we are just doing their underrating. We are just putting them into the underrated company. Means actual they are having more capabilities, but we are just making them undervalued rather than their actual worth. So based on the fundamentals, we can say like that this is a value stock. So investors buy such kind of stocks so that they can expect that their price might rise later, faster, right? So for example, in case of again India's stock market, if I say ITC is one of the company which we can say that it is a value stock because their PE ratio is comparatively, you can say that lower than their peers. So if you compare the PE ratio of their peers or the PE ratio of their particular domain, so their PE ratio is comparatively very much lower. So and their fundamentals are also very stronger. So based on that, they can say that this is a fundamentally strong company who is currently undervalued, and might be there is a chances that it might rise later, right? That this kind of stocks we can call like a value stocks. And then next is defensive stocks. So the stocks of the companies that provide essential goods or services and perform well even during the economic downturns, such kind of companies are, or such kind of stocks we may put into the defensive stocks, right? So example is just like Hindustan Unilever or Nestle India or Patanjali or Dr. Reddy's Labs, which produce the products which always in demand like soaps, foods, medicines, or which are regular in demand. So the companies grow regardless of the recession or regardless of whatever situation it is. So such kind of stocks whose performance is even well during the economic downturns, we can put them into the defensive stocks category, right? And thereafter the cyclic stocks. So the stocks whose performance rises and falls with the economy, and they do well during the booms and poorly in the recessions, right? So, for example, if you talk about the Tata Motors, JSW Steel, cement companies, so it completely depends on the industrial and economic activities, and such kind of stocks we can put into the cyclic stocks. Apart from that, there are also some kind of stocks we may put into the subcategory of cyclic stocks, which do rises in the time of their results, and again they do not perform that much well. Maybe some fertilizer related shares, or you see that if some good news is coming related to the sugar sector or fertilizer sector or something like that, it could be in any sector, maybe construction related, cement related sectors, it could be any related. So whenever their results coming good, or wherever there is a good news based on the sentiments or whatever, they perform well, but then again they do the poor, right? So this could be the subsection of the cyclic stocks, right? So this is this particular kind of stocks we can put into the cyclic stocks. And then the dividend stocks, everybody well known about it, right? The stocks of the companies that regularly distribute the profits to the stakeholders as dividends, and popular among investors seeking steady incomes. The particular investors who are going to steady seeking the income, it could be any group age of the people or investors. Such kind of stocks we can put under the dividend stocks. For example, the Vedanta, IOC, Coal India, Infosys, SCL Tex, and many more such companies are there which is regularly paying dividends to their stakeholders. So such kind of stocks we can put under these dividend stocks. So in this particular video, we have discussed about what is a stock and what are various types of stocks. I hope that you understood the purpose of this video lecture series. Here we are going to just clear our basic fundamentals about the basic terminology of stock market. Our complete focus is on educational. Again, I am putting disclaimer. Whatever stock names we are going to mention in this video and maybe in later on, they doesn't have any kind of relation, so that you can just get you can say the agree or disagree, whatever. But it is completely for the educational purpose only, right? So if you do any investment or whatever you do, kindly think and research from your own, and then you do such kind of things, maybe investment or whatever you are going to do. Completely put your knowledge first, right? So more lectures are going to be released soon related to the stock market, and we are going to discuss such kind of terminologies so that the basic terms and basic keywords clear. If these basic terms and basic keywords are going to be clear, then definitely we can go very smoother on to the maybe the advanced versions of the stock market related lectures. So in comment section, please let me know what are your views on such kind of lectures. Are you enjoying it? Are you want any specific lecture, or if you are interested in any specific topic, also we welcome every thoughts, right? So please do comment, like the video, share this channel, share the particular video also, and subscribe it, and keep stay tuned so that we can put more knowledgeful content for you in future. Thank you so much, guys. Have a very nice day. Jai Hind, Jai Bharat to all of you.